Good afternoon and welcome to Market Wrap number 181. Stuart Williamson here at the helm. This week we're looking into the Welsh property market, also APW back in Hong Kong at .cod, discussing supported living, a property investment that gives 10% fixed returns plus the CPI addition. Then welcome to API's growing family. We've got Christian Cudd coming on board. And finally, what are the 2024 predictions? Okay, so let's look at Wales first. The housing market remains weak, but the outlook is improving, and Wales will outperform the rest of the UK in the next 5 years, with price growth of 21.9%. Prices in Wales have fallen in 2023 as rising mortgage rates temper demand. Transactions have also fallen below the 2017-2019 averages. However, rents are rising at record rates. Savills expect continued weakness in the sales market for 2024 as interest rates remain at or near peak. Beyond this, affordability constraints will ease and price growth will return. Both new homes completions and new planning consents have fallen in 2023, meaning the outlook for homes delivery has weakened. House prices have fallen and perhaps will fall further at the beginning of 2024, according to Savills. However, from the end of 2024 and 2025 onwards, with mortgage rates sharply falling, constraining affordability through their rises and decreasing demand, with that abating, RICS believe that house prices will begin to rise again. They expect from 2025 to 2028 house prices to rise in Wales by 23.9%. There's a lovely diagram, have a look at that. Savills believe house prices in Wales will outperform the UK average. In a similar format to the north of England, affordability in Wales is less stretched, meaning that the impact of rising mortgage rates has been less severe. Forecast price growth of 21.4% shows it's the best anywhere in the UK. So if you're thinking of buying in Wales, it's not a bad idea. Price falls have not been as equal across Wales. The strongest growth in the year to July was seen in the southeast. For example, Blaenau Gwent was 7.6% up, while the largest falls were in the northwest, Isle of Anglesey, according to the Land Registry. And this is very similar to what we're seeing in Cornwall, Devon, where prices went up hugely because people were running away from COVID. Now they're coming back down again. So it's a similar theme. And you're seeing it in many places across the UK. Whitby, where I'm from, has a similar sort of stuff. People thought they'd go to the seaside and escape COVID. Now COVID is no longer the big threat it was. Things are a lot better. The overall rises and falls in Wales have lagged the nationwide index, which continues to show some growth in markets. However, the index will, as I said, in the southern parts of the UK show further falls. Transaction activity has been weak in 2023 in Wales. The first 9 months of the year saw less 18% transactions than the pre-pandemic average. And we expect activity to remain low in 2024, according to Savills. Lovely little chart there if you look at. Rental growth on all tenancies in the year to September has been stronger in Wales than any other area in the UK, according to the ONS, at 6.9%. Rents for new lets have increased by 10.4%, according to Zoopla. Demand for rental properties still significantly exceeds supply, according to the RICS survey. Many landlords have sold their properties under pressure from higher interest rates and greater regulation through the Renting Homes Wales Act, which you covered 2 weeks ago. Renting is becoming less affordable across the market, but with those in the lower end particularly struggling. LHA has been frozen since the pandemic, meaning that average LHA for 2 beds in Wales is now just 2.1% of the market. So people are getting rid of housing association. You do know at the last budget, as we covered last week, that has been reversed. Pressure in the rental market will incentivise buying activity from first-time buyers, while home movers are likely to be less active. Rents on new lets grew by 10.4%, as I said, below the July 2022 average of 12.2%, but well above the long-term average. Rental growth for all tenancies, including renewals and existing leases, is 6.9% for the same period. Rents are up by 33% since the pandemic, becoming increasingly unaffordable, particularly for those on lower incomes and housing benefits, for whom local housing allowance has been frozen since the pandemic, as I mentioned. Many landlords are selling their properties due to higher costs of debt, exacerbating an increased supply-demand imbalance and driving strong rental growth. Rents are likely to continue to rise in the coming months. So buying buy-to-let in Wales for people who can afford it is a good idea. The tables here show that sort of return and that sort of growth we're likely to see. So, predictions for 2024. I've taken this from a variety of different sources and I think it's quite interesting. So, saddle up, listen on. Increased demand in suburban and rural areas. One of the significant after effects of COVID-19 pandemic has been the re-evaluation of lifestyle choices, with remote work becoming a mainstay for many companies. The need to live in bustling city centres has reduced. As a result, there will likely be a surge in demand for properties in suburban and rural areas, offering more space and better quality of life. That is very much like a south of England approach. If you look to the north, you'll see that's already occurring. You can live in Batley and work in Sheffield. It's not difficult and get a good price properties. So that's what's holding the market up north. We're going to see a slowdown of the London property market with the escalating property prices in London and the growing attractiveness of northern cities and suburban regions. It's predicted that the capital's property market might experience a slower growth rate. That doesn't mean a decline, I don't think it will be, but a rather more modest appreciation than previous years. Tech-driven property transactions. The digital revolution in the property market will continue its upward trajectory, as seen with the quick home sale platforms, technological innovations that simplify and expedite selling and buying processes that will dominate the market. Virtual reality home tours, blockchain contracts, AI-driven property valuations are some of the trends we expect to see gain more traction in 2024. Sustainable and eco-friendly properties, climate change and environmental concerns are at the forefront of many people's decision making. There's a growing demand for properties that will incorporate green technologies and are energy efficient. In 2024, properties with such features are likely to command higher prices and will be more attractive to discerning buyers and investors. Flexible housing. With changing family dynamics, work from home culture and evolving personal preferences, flexible housing will be on the rise. Properties that can easily be adapted or reconfigured to cater to changing needs will be in high demand. Continued appeal of quick sale platforms. Given the unpredictable nature of global events and personal circumstances, platforms that offer homeowners a quick and hassle-free method to sell their properties will continue to grow, particularly in popularity. Investors will also remain keen on such platforms as they offer properties at competitive prices, ensuring better profit margins. So that is what we believe is going to happen in 2024. The conclusion, 2024 promises to be a pivotal year for the UK property market, shaped by past events and current global trends. While no prediction can be 100% accurate, understanding these potential trends can offer a roadmap for investors and homeowners alike. For those considering a quick sale, especially for cash-rich investors, staying updated on these trends and making an informed decision will be key to maximising returns. The property market may be in perpetual motion, but with the right insights, there are always opportunities to be harnessed. And we're here to help at APW. Now, one of the things there is out there that is a very good opportunity is the sheltered accommodation option. We were up at .cod in Hong Kong this week, and we had Adam Hammond talking about sheltered accommodation, supported living. And what that basically is where you have people who are not capable of living, unfortunately, in the community on their own, but should be and want to be, and so they move into supported accommodation, which is basically where you have concierge, you have nurses, you have wardens on site to look after the residents. You, as an investor, spend between 100 and 150, 200,000 pounds buying one of these units, and it is rented back from you by a management company who are paid by the Department of Work and Pensions. They pay you 10% per annum plus a CPI increase to own these properties. So they are very profitable. It's backed by the government. They should be very secure. So they're not a bad investment opportunity as an addition to one's portfolio. And that's what we were talking about in Hong Kong this week. So that ends the year after us doing Abu Dhabi, doing Doha, doing Dubai, Singapore, and KL coming up this coming week. That will be our full season. It's been a great opportunity to go out and visit people. We're being very successful as a company, and we're helping a lot of our clients do very well. One of those signs that we're doing very well is we've recently recruited a gentleman to come and work with us in KL. Christian Cudd, he joins us from Chesterton's in Fulham. With 10 years in the UK market, he's a great addition and builds our team, which we've already added an extra 10 people to this year.
I worked in the London market for nearly 10 years, so I worked for a couple of the big corporate agencies over there, dealing with everything from £500,000 one-bed flats to £5 million penthouses and multi-million pound houses. The really exciting move, I think, for me is to sort of look at the sales industry in a slightly different way, looking at kind of international side of the business, whether that be through investment or future planning for expats that are out here in Asia.
So welcome on board, Christian. Thank you as clients for listening and watching this. I do hope you like it. It's just designed to share some information, some knowledge as to what we believe is going on in the market in the upcoming buying cycle. It's a great opportunity to buy at the moment. There are some good value locations. It's not doom and gloom like it was 6 or 12 months ago. Thank you for watching. Do take care. If you wish, if you must, if you insist, do comment. It's always great to hear from you. Over and above that, take care. Cheerio.